So hello everyone and welcome along to this live webinar. And today we are joined by Daniel Foch and Nick Hill. Hi Daniel and Nick.
Hey, how's it going?
Thanks for having us.
Yeah, thanks for having us. Excited to do this. These are always fun.
Yeah. And today we have a great agenda for you. So we will start with just a brief overview about Lendlord and its main features. And then so Nick, you prepared basically two deals for us to analyze together. So it not really like in order, but we basically touch on all of these agenda items when we analyze the deals. So we'll discuss how you can also generate the works plan. We will take a look on the metrics. We'll take a look on best case, worst case scenarios. And we'll also show you how you can basically manage your pipeline. Also, we'll see how you can take a look on a Google map when you analyze the deal. If you are watching this, we will upload the recording to YouTube, so feel free to subscribe to our YouTube channel. And today we also run a special promotion for the people that attend to this webinar to get the 90 days of free trial to our premium plan. And I will share the links in the chat in a sec. Feel free, if you have questions, feel free to put them in the chat, and we'll try to answer. And we'll have like a session of questions and answers in the end. So while I'm sharing the links, perhaps Nick, Daniel, if you can just introduce yourself, like, briefly, so people will get to know with you.
Sure, yeah. I'm Daniel Foch, one of two hosts of the Canadian Real Estate Investor podcast. I work as a real estate broker focusing almost exclusively on investor clients, and we use Lendlord a lot for deal analysis and then also for our clients to help them manage their properties once they've taken possession of an investment.
Yeah, I am the Dan's co-host in the Canadian Real Estate Investor podcast, which obviously we talk a lot about investing in real estate. Lendlord, which we've been using for over a year now, has led us to purchase properties. It has led our clients to purchase properties, and it consistently makes me look a hell of a lot smarter than I am because I can run numbers on deals within minutes. So we've got two of those today for you, a good example and a bad example, which I think is important because you will find a lot more bad deals out there than you will good ones. So thanks everyone for joining. I'm excited to go through this. And if anyone has any questions or wants a deeper dive into anything, feel free to reach out to Dan and myself after this session via email, Instagram, text, or whatever is easiest for you.
Yeah, Nick and Daniel, you can share your Instagram channels or like your contact details on the chat. I'm also adding our YouTube channel, so if you want to get more content, feel free to subscribe to our YouTube channel. So let's start with the first item in the agenda with a brief overview on the Lendlord platform. So I will share the screen, 1 second. Before I start, I put on the chat the coupon to get the 90-day free trial for our premium version. So Lendlord is free to use, but we do have some enhanced features. And if you want to use them, you can start a free trial by using the coupon. You just need to go to the settings page. It's available from the top right menu, click on settings. And then if you are on the basic plan, you will have a place to click on upgrade and then put the coupon to get the 90 days. And if you don't have a Lendlord account yet, just use the other link that I put to sign up and start your free trial. So a brief overview about Lendlord. So Lendlord, we have three main sections: invest, manage, and finance. The invest, which we will focus on this webinar area, you will see two deal analyzer, one for rental properties and the second one for flip projects. On the manage side, this is the place to manage your existing investments. So you have the My Portfolio page. This is the main page to manage your property details, and you can manage basically unlimited properties under different owners, which can be filtered quite easily. For each property, we have different sections. You have the general information, including the purchase details and the ownership, then the mortgage section, enhanced property details, details about your utility providers, the details about your insurance, and if you have other finance products, you can also track them here. Any due date that you will put on the property, you will receive a notification before the due date, which you can control from the settings page. You can decide when you want to get the notification. Then we have the My Tenants page to manage your tenants and tenancies. You can also manage the rent collection using the payment schedule module. And you can also store your documents on the My Documents page. You can store in under different levels. You have the common files for each property, and then also for each owner. And the nice thing with this module that you can create packages to share documents and details about your property with third parties. So you just need to select the documents you want to share. That platform will create an HTML report that with all the documents and some details about the property and the tenancies, and you can share it with others. And you can also specify for how long this link will be available for the third party to review the report and download the documents. So very valuable feature. In general, to keep all your data in one place, it's a great advantage. And it's also available on mobile, on our mobile apps. Then on the manage side, you have the cash flow section, and this is the place to manage your transactions on an ongoing basis. On our premium plan, you can link your bank account. We use Plaid as our provider. In a secure way, you can connect your bank account, which we don't get any of your credentials. We just get a read-only access to retrieve the transactions every 24 hours. And then you just need to allocate the transactions to a property, and if it's a rent payment to a tenant. And you can also apply rules to automate the transactions. So basically, to say instruct the platform to allocate a transaction to a property and to a tenant, and if it's expense, just to a property. And then you can review the profit and loss over time in the profit and loss page, and you can also generate reports, P&L report, property breakdown report, expenses breakdown report, income breakdown, and tax report. So very useful area if you maintain an existing portfolio. The interactive report, which we send over an email every week, is a great way to take a look on a high level on your portfolio. And you can see some metrics about the performance of your portfolio, some data about the top performing properties, data about your worst performing properties, reminders. You can also manage all a prospect list and review it in this report. And then you can go property by property and review, but also update. So let's say that you think that the property increased a bit in its value, you can edit it from here. You can also see the performance of this specific report and how this property and how this property compare, if you compare it to other properties in your portfolio in terms of those metrics. So this is also something that we have on the manage side of the platform. And the last area is the finance, which we now provide only mortgages using HomeWise, which is our mortgage broker partner on Lendlord. So you can see rates and apply online. And soon we're going to launch bridge financing, short-term loans with another partner. So stay tuned. So now basically we start the webinar with the first deal that we are going to analyze. So let's start, Nick. So we chose, I think, two properties. Let's start with the first one. I think it's this one, yes?
Yeah, for sure. And before we dive into that, there's just a few questions here we can address. Bala, yeah, so we're going to go over where the cap rate pops up right now. That's the exercise we're doing. And then Kristen asked any processing fees for using the premium transaction features.
So the premium plan subscription fee is either $12 per month if you're on a monthly plan, or $99 per year. And as I mentioned, if you use the coupon code that I put on the chat or the link, if you don't have a user yet, then you will receive 3 months free trial to try it out and check all the premium features. You need to put your credit card to start a free trial, but there will be no charge, and you can cancel at any time before during the free trial period. So hope I addressed this question. No additional per transaction fee? No. You can, like, if you link your bank account, you can link unlimited bank accounts under the premium plan. There's no limit.
But it doesn't actually process the transaction. It just uploads them, I think, right? Like it just syncs them from your account.
Exactly. Yes. So it's just sync the transactions on a daily basis, and will allocate them automatically to your tenants to track the rent collection and as expenses and also categories. Having said that, we are going to introduce a tenants app very soon. And in the tenants app, you will be able to share the payment schedule and documents with your tenants. We'll also be able to communicate with the tenants and get maintenance reports. And this should be released in the next few weeks. And there you will be able to initiate payments and receive rent payments from your tenants in a digital way. But as I said, it's still like in testing, and hopefully we'll launch it in the next few weeks. All right, so let's start. So in order to start analyzing deal, I will go to the invest area. In the menu, click on Deal Analyzer Rental. So Nick, you chose two properties. This is the first one.
The first property here is in London, Ontario, which is a great investor market. There's some schools there. The properties and prices are a lot less of a barrier to entry. This description is actually great because they, unlike most realtors, actually have put the projected rents for the units in there. It's vacant, and I believe it's been sitting on the market for a couple of weeks. So this is actually, at face value, seems to be a pretty good deal. So let's go through the numbers and we'll see what it spits out.
All right. So I'm starting with typing the address. Okay, so the
purchase price of $499.
And expected monthly rent.
Expected monthly rent. So they had projected stuff in there. I took the lower average of what they had projected, and it comes out to about $2,800 a month. No need for improvement costs on this one, so I left that one blank. Again, for everyone listening, this is essentially the best and fastest way to do napkin math right here. Steve-O, it's got to be the cheapest Ontario property I've ever seen. Ontario's big, Steve-O. You're not looking in far enough away, I guess. There's this one's cheap, but you'll see it actually doesn't turn out to be such a great deal here.
Nick, about the closing costs.
Yeah, I put 12,000 for the closing costs. Maybe a little rich, but I like to.
So all in all, you would put like 12,000, you say?
Yeah, I didn't even go and break everything down like that. Again, you can get as in depth or high level with Lendlord as you like, which I love because I like to analyze a lot of deals, and this allows me to do that quite quickly. So closing cost 12,000. Is that 12,000 or 1,200? Yeah, 12,000. So add another
12,000 or 1,200?
12,000.
Okay, all right. So that's
Yeah.
12,000. All right. So all in all, the purchase costs are 517,455. All right. Okay. Now, in terms of mortgage, would you
So I
take?
put it at 6%. I put 80/20 loan to value.
All right.
And then as far as operating costs go, I had again, you never know, but I had $100 in there for maintenance and $100 in there for other monthly costs. I left utilities at zero because I always like to try to get the tenants to pay the rent. And yeah, sorry, thanks, Vimal. The expected monthly rent is $2,800. Yep. Appreciate the correction there. And then as far as occupancy goes,
Wait, 1 second, Nick. Like you will use the property manager here, managing agent.
I took the property management. I actually, sorry, yes, I left the property management in, and I did add another $100 from monthly costs, and then $100 for maintenance. Again,
$480 any on a monthly basis.
yeah, so that's likely expensive, but again, I'd rather be conservative here and not too aggressive. And then if we look at the sorry, let me just get over here.
Yeah, one word about the long-term assumptions. So here basically it's assumption for the entire holding period. So in this case, we chose 10 years, and then we just need to put our assumptions, but we can do best case scenario and worst case scenario as well. So let's start with the standard, the most likely scenario. So what would you put on the annual property appreciation?
I usually keep that at about 3%. Annual rent appreciation legally in Ontario is only 2.5%. Annual inflation, I think I just had it at 3% as well, which might be wishful thinking right now, but
no, but it's for like average for the next 10 years. So
exactly, yeah.
Rent appreciation, like are you going to increase the rent in this area?
It'd be maximum 2.5 is the allowable amount.
All right, and the occupancy rate, which means so 92 will mean like 1 month every year the property will be empty. So what will be your assumptions, the most likely assumption?
I'd say at worst case probably a month. So I think 92 is probably a good place to leave it. I mean, anyone that has properties right now knows that there's lineups of people trying to rent them. So you likely wouldn't have an issue renting it. You just want to make sure that you have the right person in there.
All right. Okay. So
and the property taxes, I believe, were like 2,600 or something like that.
all right. So let's look at the metrics. So you will see like a negative cash flow and negative cash on cash. So basically the return on investment will be negative.
Yeah, so the reason I wanted to include this one is because I think a lot of us probably saw that deal. It's a great looking little house in a place in London, which is a great market. You'll never have an issue renting there, just based off of employment and the school, etc. The barrier to entry at less than $500,000 seems quite achievable. However, as soon as you start punching these numbers in, you realize that actually it isn't such a great deal. You're losing, the cap rate's below 5. You're losing money your first year. You're losing money every month. So the reason I wanted to include this is because I actually thought when I first found it might be a good deal. But that's the best thing about this app. One of the best things, in my opinion, is that, if you analyze a lot of deals, which you should be, if you are an aspiring real estate investor or a real estate investor, the likelihood of finding a good one is a needle in a haystack these days. So there's going to be more deals like this than the other one, which actually is income producing and has a really great cap rate. So I just thought it was important to see, past face value, what the actual return metrics and back end of a deal like this looks like.
Yeah, makes sense. And it's very, very important to realize that. And another thing that you can do is to run the other scenarios as well. We'll not do it now, but just you can see that if you use the button of what if scenarios, you can see the best case scenario and change the numbers, and also the worst case scenario to see how it will impact your, mainly the long-term assumptions. And then another thing that you can do is to go to the prospect report to review the property on a Google map and see a summary of the entire deal. You can see the development of your equity and the mortgage balance over the years, and also the development of your cash flow based on the rental appreciation and inflation assumptions. You can see also the holding period breakdown, and also you can export it as a PDF report, which is also part of our premium plan. And then you can share the report with others.
So one of the things I like most about being able to extract this report and share it is it saves us as investors looking for deals the work of actually putting together a little package like this. Now, again, you can obviously add to this package and put your own logo on the front page and put a picture of the property and add other, this is where the school is, this is proximity to the hospital or main highways or whatever that may be. But this saves a ton of work for us, and it also presents it in a very easy to understand fashion if you're looking to attract a money partner or something of that nature.
And similarly for professionals in the space, I will use these a lot to send them to clients, and I know I think Lendlord's working on a feature to make that easier as well. So but I use these reports all the time to quickly analyze deals for people, to just give them some napkin math. And eventually you do have to build a pro forma and a full spreadsheet, I think, when you're actually diving in on a deal, but this is an easy way to sort for what deals are worth doing or worth looking at, worth even going to tour or modeling out.
Yeah, Daniel, by the way, I'm showing the QA environment, the testing environment. This is the UK version. You can ignore the pounds, but this feature that you just mentioned will be live hopefully in the next 2 weeks. Is after you complete your analysis, you can share the analysis with others, and then it will basically send an email to a third party or a friend or a state agent or anyone to want to share the deal with, or your customer, of course, and they can log into their Lendlord account to review the deal, or they will need to create a Lendlord account to review the deal. So it's like another feature that we are going to introduce very soon. All right. So so now let's unless we have some questions.
Kristen, those 25 questions, we'll have to do a different. That'll be a different webinar. Vimal, can we input US properties?
Yes. So if you have only properties in the US and you want to analyze properties in the US and manage properties in the US, you need to open your account under the US country. So when you sign up. But let's say that you have a mix or you want to analyze properties in the US, just need to type in the address. I think the Google Map auto completion will be just for like Canadian addresses, but you can definitely put a US address. And I believe that, yeah, in my portfolio, we can be able to see it on a map, but you will not enjoy the auto completion of Google Map unless you open the account as a US account. All right. And let's see if we have any other question. Okay, you know what? Let's see after that if we have questions we need to address, and we will now analyze the second deal that you found, Nick. So now we're speaking about this property.
Yeah, so this one's cool. So Edmonton, obviously there's a bit of a price difference between Alberta and Ontario these days, especially Edmonton, which would be, the second largest city in Alberta. This is a really cool property. They throw in that it's celebrating 110 years. That's great. It's been on realtor.ca for 85 days. So immediately that's a bit of a red flag, but also an opportunity. You want to know why. Maybe they won't budge on price. Maybe there's some difficult tenants. Maybe market rents are way below market value. Lots of reasons. But again, we're just here to analyze this and do some quick napkin math. If we like it, then it's worth a call to the agent, or it's worth a bit more due diligence as to why that's been sitting. So cool thing about this one, it is a sixplex. So 6 independent apartments, each with its own kitchen and bathroom. 5 of them are 1 bedrooms and 1 is a bachelor suite. So we left the purchase price at the same, closing cost, same thing, 12,000. And I think I had it as I think $900 for the I went a bit below market rent. Market rent for a 1 bedroom in Edmonton is anywhere from 800 to like 2,000. So I went reasonably low with it, and I put $900 each, and then I think I put $750 for a total of $5,250, $5,250 as the expected monthly rent.
So all in all, you're like, let's cut
5,250. So that, funnily enough, almost hits a famous old real estate rule, the 1% rule, which is rare these days.
A unicorn.
Unicorn, yeah, exactly. However, these are assumptions, right? We don't know how many of the units are actually vacant, but this is working off of the assumption that we could get vacant possession, or as the units turn over, this is the eventual cap rate that you could achieve.
Steve-O, are you from Edmonton? Would these assumptions be correct if you are?
I'm from Calgary, but I lived in Edmonton for a while. I went to school there. So
What are your thoughts on the assumptions that we use here?
I think something's wrong with that property.
Yeah, maybe.
I think your assumption's fine. The purchase price is very low for what it is. I gotta look at where that address is, but yeah, that seems
Maybe
quite
bad location.
crazy for Alberta.
Yeah.
Even like Calgary's gone up, but even Edmonton, right? Like those numbers looks crazy good. So
Yeah, usually I find whenever I pitch a good deal like this on TikTok or something as like just to promote, it's people are usually like, that's in like the worst area in the world or something. So I guess we'll see. I'm sure there's a catch here, right?
All right. Are you going, Nick? You're going to do an improvement to the property, or it's
It looks to be from the pictures in fairly half decent shape. So I did leave that at 0 closing costs. I put the kind of just standard 12,000, 80/20 loan to value.
yeah? What I don't know, like it didn't calculate the transfer tax. We can
6% mortgage rate.
All right, and loan to value.
80/20. So 20% down.
All right. Okay. Then
And then basically the same metrics for the long term and monthly operating costs, where I left the standard 10% management fee and the maintenance as well as the monthly cost. Now that's definitely high for a property like this, 725, but we don't know what's happening in there. So that could be that could be more correct. Also assuming that a lot of people buying properties like this are out of town investors, right? We have a lot of flight of capital from Ontario and Vancouver that's investing in markets such as Edmonton. So I felt leaving a management fee in there was probably more prudent than in some other deals that we've looked at.
Yeah. In terms of long-term assumptions, so perhaps it's better to reduce the occupancy rate. Let's go to the standard scenario. Because you have more than one unit, perhaps it's better. Tell me what you think. It's 92% or even lower?
Yeah, I mean, it's tough. I would say again that, anywhere in any semi-major city across the country, you're not going to have problems renting anything. But why don't we play with it a bit and see what happens? We can lower it to maybe this property, based off of what Steve was telling us, it might be in a bad area, so you might have a bit of a rougher crowd staying there, which could take longer to fill. Annual property appreciation, I'd lower that to probably 3% just for now. That just basically kind of keeps up with the rate of inflation. Annual rent appreciation, 2.5. Again, I think the laws in Alberta are a lot more lax than they are here, so I assume you could do larger rent appreciations. I just don't know how much you're going to be able to actually get for a small 1-bedroom in a smaller sixplex like that. And then inflation we can keep at 3 or 4%. So even though this might be in probably the worst block in Edmonton, it still does come out from a napkin math perspective at over a 9% cap rate, right? So I mean, you're making the better part of $20,000 a year off of this property, even with those higher monthly expenses. That's like, almost $800 in monthly management fees between management as well as maintenance and just random other monthly costs. You can call that CapEx, your CapEx budget. So this deal again looks a hell of a lot better. Now again, this is a totally different deal from the first one, right? A duplex in London versus a sixplex, a converted sixplex in Edmonton is very, very different. But we can see the difference in the return metrics as well, right? This has basically double the cap rate. You're actually making money off of this one. But then again, if we start to play with the scenarios, I'm interested to see what happens in a both positive and negative way.
Yeah. All right. By the way, this is a nice feature that you can, if you want to compare different prospects that you analyzed in the past, you can just use this drop down and see the metrics for each. But another thing that you can do is to go to my portfolio, and here, if you just uncheck the existing properties drop down, and then you have the prospect properties drop down. So basically here you can compare two properties. So let's put this one, and was this one, yes. And then I would switch to the performance view, so you can compare the cash on cash, the 12 months ROI, the cap rate. So it's easier to take a look on two prospect deals at once. So it's also something that it's important to know. And here again, you can go to the prospect report and also take a look on the Google Map. Nick, Daniel, any word about using Google Map, or what are your thoughts on that?
Yeah, I mean, typically I would just use it as like an area overview. It is an opportunity to sort of identify what Steve-O mentioned. Like you can often assess the character of an area pretty well just by a street view. And then also the walkability, proximity to transit, the types of commercial service amenities that are there. Are you seeing more your laundromats and stuff like that, or is it more of a an area. Is there a Whole Foods versus a Food Basics as an example, right? Again, you can make assumptions based on the large scale research that big retailers have done, even just by comparing, is it a Starbucks or a Coffee Time as an example, right?
I also love how the Edmonton Street View was still snow in winter. They didn't
They only have 3 weeks out of the year where they don't have snow.
Yeah. But yeah, no, great point, Dan. I mean, again, like, utilize all the tools that are simply there in front of you. Take a tour around the neighborhood in Google Maps, look for the big box retailers, look for the hospitals, look for the transits, look for the closest. Okay, there we go. Nice and green. Okay, that's much better. So, I mean, a lot of this stuff, again, right, we want to, before even getting an agent involved or a mortgage broker involved or any of that kind of stuff, you're able to do so much due diligence just using Lendlord and then being able to pull, like when I came up with those rent figures, right, that was basically just going to Zumper, rentals.ca, Rent Panda, cross-referencing a few things, hopping on Kijiji and seeing what the average rents are and being able to come up with a realistic number for those. So between Google Maps and Lendlord and all the other tools that you can compile to use to do this napkin math, it makes finding a good deal so much easier, right? You spend a day analyzing deals through Lendlord across the country, go through 20, 30 of them. And what were those rent references you remember? Ethan, so it can be anything from Zumper, Rent Panda, rentals.ca. Honestly, just just to keep it as basic as possible, you can even just type in average 1-bedroom rent in Edmonton. Thanks, Steve-O.
All right. Another thing I wanted to show you is the works plan generator. It's also part of the premium plan, but this is mainly for flip projects. So if you purchase a property in order to make some improvement and then sell it, then basically you can use our works plan generator. And here basically we'll start typing the address, the purchase price, improvement costs, but here you can use our works plan generator and you can add items with some description, notes, the cost, of course, that you are going to spend, and you can put a start date for this item and end date. And then you can add other costs and create a works plan. In the UK, we call it schedule of works. And again, you can share it by download it as a PDF or as an Excel spreadsheet. So this can basically, you can break down the entire refurbishment project. And also you can take a look on the timeline. On flip project, usually you will use a short-term loan if you are going to use finance for that. So it's very important to understand the timeline of the project in order to meet the deadline to repay your loan. So using this flip analyzer, it's a great way to understand what will be your profit in flip deals and also how the length of the project will impact your return. Do you do like some flip deals, Nick, Daniel, recently?
Flipping's not really my personal game. I do know some people that do it quite successfully. I can say that in Ontario right now, and at least in some of the more major markets, it's become substantially more difficult just with labor shortages, cost of materials, and of course interest rates. The BRRRR method was extremely popular for probably the last decade, and that's, I think, fallen off quite hard over the past 2 years. Exactly, and the new flipping tax as well. So it's kind of, the government's kind of de-incentivized a lot of flipping just with the current environment. I still know people that are doing it quite well in kind of smaller markets and even some within the GTA. So I wouldn't be an expert on this, but I mean, again, you know, this process and just these inputs right here make it so easy, right? Like, what's the purchase price? How much are you spending on it? Throw it all in here, and it'll give you the same easy to read numbers that the buy and hold stuff does.
I was gonna say, maybe worth just doing some quick napkin math on something that Ethan mentioned, which is building a fourplex in Toronto. So maybe we could do, if you want to do it, run one into the flip analyzer, we could just put like a purchase price. I would say, Ethan, you're probably using a land cost of like 1.5 mil, I would guess, in Toronto. If you're buying like a tear down house. And then I don't know what your construction costs would be, but if you want to put it in the chat there, but I would assume probably you're $300 a buildable square foot. And if you're doing a fourplex, let's say of 4,000 square feet, I think you'd be 1.2 mil construction costs. And then we could,
Danny, would you take a hard money loan here, like short-term loan?
yeah, you'd probably need, trying to think, you'd probably need construction. I don't, yeah, you could probably do, maybe 8% money a year. Or,
I put 10 just in case.
sure, yeah, that's fine.
10% annually. All right.
Oh, so Ethan's example is in New Brunswick. So Ethan, what would you put your land cost in at? Could we change the land cost to, actually he hasn't given that yet, but $850 to construction costs.
All
And then we
right.
could maybe put the land cost in at like 300 grand. So the purchase price,
Again, what would you change?
300,000. Oh, he said 75,000 actually. So put in 75,000. Sorry, in the 75 in the purchase price and 850 in the improvement cost. Sorry,
750 here or
75,000. Yeah,
75,000. Let me take a look. Let me check. 1 second. Saving 5 for the land. Okay. This and the improvement cost.
850,000.
All right. Okay. Then let's take.
Sorry, the improvement cost should be 850,000. 850,000.
This.
One more zero.
So it's actually it's a new build, no? Like you just.
Yeah, it's a new build. Yeah.
All right. Okay. So
I just want to show him how to model it, because I've done this a couple of times using the flip calculator.
all right.
And then if you can put the ARV, I don't know what you think, Ethan, that would sell for, but probably $1 million.
All right. Agent commission.
1.2, he said. If you put it to 1.2. Yeah. And then the commission, 5% total.
All right. Okay. So, and the land, like 12 months would be enough.
Yeah, 12 months should be enough. The Bala, the cost of capital is in there. I think it's 10% per year.
Where would you put it? Like the monthly holding costs?
That's just your loan details. You have it in there already.
All right. Okay, so yeah, so you have nice profit, like 22% in a year.
And could you just pull up the works plan as well, just to show Ethan, if he wants to put in, like, so Ethan, if you want to put in, actually like budget out your renovation and build like a timeline, you can do that as well. And the 10%, Ethan, that we use for the loan is making the assumption that you have to use hard money, so like a private loan to build the fourplex rather than a bank construction facility. I mean, even bank construction facilities right now are in the 6s, 7s.
All right.
And then you can export that report and to give it to your investors, Ethan, if you want, and it'll give a pretty impressive summary of that.
Yeah, just go to the prospect report, click on export PDF, and you will get the summary. All right. Okay.
Sorry, he was just asking if you can you go back to the so if you can see the cost of capital section. So see below purchase details there, Ethan. There's loan details, and you can put what loan to value you're expecting, and what the monthly interest rate is on the cost that you're spending there.
This takes into account that you will take the loan on the land price. So perhaps you can get development finance, but then you can increase.
Right, that would change the assumptions of the projects a lot, actually.
Yes. So if you take development finance, I don't know, 500,000, then yeah, it will change the profit eventually. So the loan cost will increase, but the profit increase dramatically.
Right, because your cash in is
yeah. So the loan cost will increase from 7,000 to 60, but your profit.
That's not assuming a discharge though on the so you would just have to deduct how much you owe from that profit.
So it's deducted. So basically, if I understood correctly, so let's say you take development finance 500K, then your loan, like the interest and fees, would be 60K. Based on those assumptions. Of course, you can increase it if needed or change it. And then the net profit. So basically, cash you put. There is a bug here. Okay, I understand. So
yeah, you see, like because it should discharge that.
Yeah. Okay, there is a bug here.
But you could just do that math, like if you know how much you put in.
My bad. Yeah.
Oh, there we go.
Okay, now it makes sense.
Perfect.
All right. Okay. All right. If any other questions you think we should answer, or let me see. All right, so I see you answer in the chat. So just let's summarize this webinar. So thanks everyone for joining. Again, you can benefit from our premium plan for 90 days to start your free trial. You can see the links in the beginning of the chat. So you have a link to sign up to the platform and get the benefit, or use the coupon code. When you go to the settings page, just click upgrade and put the coupon to enjoy the 90 days. If you have any question, feel free, or you want to make suggestion, to use this chat box. And if you want to approach Daniel and Nick, I think you shared your contact details and channels in the chat as well. Don't forget to subscribe to our YouTube channel. Okay, last words, Daniel and Nick.
Yeah, thanks for everyone for coming.
Okay.
I really appreciate it. And yeah, make sure you guys subscribe to Lendlord and play around with these tools. They're excellent, and they've helped me a lot in my business for sure.
Yeah, and if you have any other remaining questions or want to walk through a deal or anything like that, just reach out to Dan and I, and we're happy to help. Thanks, Steve-O.
Thanks, Daniel. Thanks, Nick. Thanks everyone for joining. Good. Actually, it's evening for me. The middle of the day for you. So enjoy your rest of the day. Thanks, guys. Bye-bye.
Thanks, everybody.